Welcome back, dear traders. InstaForex analysts are ready to share their forecast for popular trading instruments and a review of the US stock market. Wall Street had a volatile session on Wednesday. In the end, the benchmark stock indexes won back previous losses and closed in the green. The Dow Jones rose 95 pips or 0.28%. The Nasdaq showed the strongest performance and gained 0.99%. The S&P 500 climbed 0.59% intraday to close at 4,027 points. Today, US markets are shut for the public holiday, but futures on the key stock indexes retain optimism like yesterday. Futures on the Wall Street indexes traded higher in the pre-market. The S&P 500 is expected to trade in the corridor between 3,980 and 4,080 points. Extending growth for today's trade, the S&P 500 was able to top the landmark level of 4,000 and close higher for the first time since September. 8 out of 11 sectors in the S&P 500 went up, with retailers taking the lead. American stocks traded mixed yesterday because the U.S. Labor Department reported that initial unemployment claims in the weekly update rose by 17,000 to 240,000 last week, the highest level since August. At the same time, business activity in the United States has been losing momentum for 5 months in a row, including November. Besides, consumer confidence improved and the new home sales increased better than expected. The benefactor of a market optimism was the Fed minutes of the meeting in November. One phrase was enough to boost the risk appetite. Most governors decided that the moderation in the pace of monetary tightening would be appropriate. And some Fed policymakers advocate for a slower pace of rate hikes, and this is exactly what market participants wanted to learn. Overwhelmed by optimism, stock investors took no notice of the next message. Some policymakers also stated that interest rates could be raised slightly higher than initially planned. The rate-setting committee does not signal the dovish reversal highly anticipated by Wall Street. Nevertheless, a potential transition to a slower pace of monetary tightening inspired stock investors. In this context, yields of 10-year treasuries slumped by a whopping 79 basis points below yields of 2-year treasuries. The inversion in the yield curve, unseen since the crash of dot-coms in 2000, means that investors are braced for a serious economic downturn in the nearest months. Nevertheless, a lot of U.S. macroeconomic data remain upbeat despite sentiment on the bond market. The Federal Reserve Bank of Atlanta reported that the U.S. GDP would expand by 4.3% in the fourth quarter. It means that the national economic output has been clicking into gear, but no slowing down. The stocks of the companies with a mega capitalization appreciated by 0.7 to 1% earlier today. Tesla shares surged 7.82% after Citigroup upgraded the stock rating of the e-vehicle manufacturer from the sell rank to the neutral rank. The Fed Watch tool now indicates that investors expect interest rates to stand at above 5% by May 2023. The market foresees the 75% chance that the US Fed is likely to raise interest rates by 50 basis points, not by 75. Today, the US stock market is thin because of a Thanksgiving Day in the United States. Tomorrow, trading floors will be available shorter than usual. Amid the empty economic calendar, the stock market could retain the momentum. While Wall Street is full of hope, the US dollar is turning sour. Its index shed another 0.25% and fell to a comfortable level of 105.80. Its intraday corridor is seen between 105.20 and 106.20. The US dollar index, which measures the greenbacks against a basket of 6 rival currencies, is extending its weakness following a 1.1% slump on Wednesday. Now it's nailed at 3-month lows. The index has stumbled 5.1% this month, being on track to the worst performance in the last 12 years. Earlier this month, the US Fed increased the funds rate by 75 basis points for 4 times straight to 3.75 to 4% in its combat against high inflation. As a result, the borrowing cost rose to the highest level since 2008. The signs of a weakness in the US latest economic data could assure the regulator to take cautious policy decisions. All in all, the Fed's minutes do not encourage a further rally of the US dollar. The Canadian dollar is taking advantage of the weakness in the greenback, so the loonie recouped some losses from falling oil prices. The USD cut pay is trading mainly flat at 1.3346. The intraday corridor for the currency pair is defined between 1.3390 and 1.3490. The commodity-reliant loonie is vulnerable to a fall in oil prices, and Brent crude futures plunged 1.04% to trade at $84.52 a barrel, and WTI futures slipped 0.7% to trade at $77.37 a barrel. On Wednesday, the benchmark rates sank by another 3% because the range of the Russian oil price cap suggested by G7 countries exceeds the current levels. The group of 7 nations is looking at a price cap on Russian seaborne oil in the range of $65 and $70 per barrel, though the EU authorities have not agreed on the price yet. Higher levels could be attractive to Russia with its future oil exports, thus reducing the risk of the supply shortage in the global markets. The decline in oil prices is escalated by the news from China. On Thursday, China reported a record high level of COVID cases. Cities around the country imposed restrictions and massive testing. Such developments overshadow the prospects of the world's second-largest economy. The crypto market is actually treading water. Bitcoin is immune to the growing risk appetite. It's trading quietly within the range between $15,500 and $17,200. The token has gained 0.5% intraday to 16,555. Altcoins are trading mixed. Ethereum, Solana and Ripple are gaining ground. Litecoin lost 1.6%. And cryptocurrency exchange Binance is aiming for a roughly $1 billion fund for the potential purchase of distressed assets in the digital sector. The crypto market was hurt by the crash of FTX, which is now seeking protection from a bankruptcy. Some crypto platforms are braced for the failed. Genesis announced that last week some changes in its loan businesses. BlackFi is reportedly ready to declare its bankruptcy. Meanwhile, Bitcoin is expected to trade in the narrow range between $16,200 and $16,700 today. And we wish you gainful trades despite the thin market. Keep close tabs on the global financial markets on InstaForex TV channel. See you tomorrow.